Okay.
I don't smile.
Everybody have
at
silver
everybody.
coins, gold coins?
Got one right here.
Okay, so it looks very nice on that side, right?
What is it?
What does that side look like?
Tarnished.
It's tarnished. This does not tarnish.
Tarnished.
No matter how long you leave it out in the sun, it's going to look just like that. That will tarnish. So it's not perfect. That's as close to perfect as you can get. Now it's not perfect, but it's as close to perfect as you can get. It doesn't tarnish. You can't destroy it. It can't be inflated away. It can't be melted away.
You could line for it.
Is that, you guys want to look at it?
You didn't hand that envelope around.
An envelope, I don't see any envelopes.
I need more of these, not less.
What would you say are the advantages doing gold investments your way as
Yep.
opposed to buying GLD?
Sure. Several things. GLD for a trade over the next 2 weeks is great. If you want to trade in and out of it, it's fantastic. It's liquid, it's cheap, no problem. But if you actually think that in a catastrophic event that you're going to get your gold, I think you're sadly mistaken. If you read through the documents, I've read the prospectus of GLD at least 5 times.
5 times.
At least.
Before bedtime?
It's fun.
Wow.
I told you I was, I mean, I've read a lot. It's not always fun.
So they
So,
audited or not? Because I've heard the big problem.
so here's the thing. So they have custodians. The custodians are audited. But they're allowed, the custodians are allowed to use sub-custodians. They are not audited. The sub-custodians are allowed to use sub-custodians. They are not audited. Also, in a force majeure event, or in a disaster, or in a,
All bets are off.
they have the ability to change the exchange rules of the gold. Not only that, but just go back to 2001 when we had the terrorist attacks. The markets closed for a week. The whole idea of gold is so that if the markets close, or if something, in some kind of disaster, you have it. Well, if the markets are closed for 2 weeks or 3 weeks, how are you going to get your GLD? What are you going to do? Not going to do it. And then also, it would be very easy for them to confiscate assets.
So how do you handle the confiscation? Because Roosevelt did it, right?
At the end of the day, you cannot stop it. You can only make it as hard as possible for them to get it.
And so what do you guys do to make it hard? 'Cause,
Well, I have it-
If they put it in Switzerland, then you saw what the U.S. government did to the Swiss banks. You
That's
better
why
tell us, otherwise, you know.
That's why that's what the places we have it stored. They don't do any business with the United States, and they're not banks.
And are they politically stable? I mean, a lot of those places tend to be backwaters, right?
Well, so the 2 places we store in Switzerland are former army bunkers that are carved out of the mountain. $300 or $400 million facilities that you go through a door that's that thick, and they lock it behind you, and they weigh you. And you go 10 feet forward, and they lock another door behind you, and you go forward another 10 yards. Anyway, after about 5 doors, you finally get into where the gold is stored. And when you come back out, if you weigh more than a gram, more than when you went in, they frisk you. Yeah, at the end of the day,
So you shouldn't eat on the inside.
yeah, I mean, they're literally like something out of James Bond. I mean, it's pretty cool to go see them, to be honest. But at the end of the day, I mean, if the government wanted to confiscate them, sure, they could roll army trucks up there and say, you can't get it. But again, you can make it harder. That's why you don't have them all in one place. We've got 2 in Switzerland, 1 in Singapore. I'm looking for 1 in America. Haven't found one that I like yet.
Are you familiar with the book Currency Wars by John
Yeah,
Ricketts?
yeah.
Interesting book, and
Yeah.
he suggested that the way that they'll do the confiscation of gold is merely to tax it at an enormous rate and put the
Again.
pressure on gold dealers, so
So-
you won't be able to trade it
Right.
without.
So I actually, I had the fortune to meet Jim about 2 months ago in New York, and I sat down with him for a couple hours and talked to him. And it was fun because he's very smart. He's thought through a lot of
Very
different
smart
things,
guy.
and that's why you should own some physical gold and not tell anybody where it's at. And if and when they ever say to turn it in, that's a decision you're going to have to make on your own. But the black market will still be very worth a lot of money.
That's the only question we have.
Yeah.
And who are these companies? Like the Swiss company?
Yeah, so they're privatized Swiss companies. They're not banks. They're not regulated by the financial services industry. What they basically did was, so the vaults in Switzerland are, what's the right way to explain it? They're literally the former army bunkers that were in the mountain, very secure. And what they've done is the Swiss government privatized 10 or 20 of them about 10 years ago. And these guys went in and bought it for, I don't know, however tens of millions of dollars they bought it for. And they now offer redundant computer systems. So the facilities, they're earthquake proof, they're electronic pulse proof, they're air quality controlled, they're waterproof. So, if you get another terrorist attack or something and all the banks go down, well, they have their redundant systems. So that's a lot of them is what they use. They have these server farms. I mean, it's like rows and rows of servers in these places. But in addition to that, they do, art, precious metals.
So yeah, I was gonna say, what are they just storing gold only? They're just
No, they'll store,
only secure storage of whatever you want?
Yeah, I mean, within reason. I mean, they want to know what's in there and stuff, but yeah, I mean, you can't roll plutonium.
Right.
Yeah. Yeah.
What's the story?
Oh, it's okay. Yeah. So the one in Singapore is a new facility that's built in the last couple of years. It's called the Singapore Freeport. You can go on the website, just type in Singapore Freeport. It's about a $300 million facility that's built in the last couple of years. Same thing. It's like something out of James Bond. They weigh you, they scan you. You go through laser fields, and it's
And what is these guys storing? You go to these private companies. You go to them and you say, "What are you going to do
it's
with
very,
these kind of set of political events?"
Yeah.
What's your response?
So they, at the end of the day, if the Army rolls tanks up to the front door, there's not much they're going to be able to do. But again, we have access to the gold anytime we want. We can call them up and say we're going to be there tomorrow, and they have to let us in. It's our property. It's a warehouse. It's a very secure warehouse, but it's a warehouse. Now they have arrangements that we can sell it through them. So if we don't want to go pick it up and haul it to an exchange and sell it, I can call them up today and say sell the gold and wire me the cash. So they have that ability to do that. But at the same time, I can show up and say give me the gold and I can drive away with it as well.
So you can sell it in place, right?
Yeah.
I sell it to you.
Yeah.
It still stays there, and you just send me a check.
Exactly.
This-
Yeah. No, I was just going to say I think my fund solves as many problems as possible. It doesn't solve everything. If somebody's going to, if you're going to invest, let's just use $10 as an example. You invest $10 in gold. Don't give me $10. Give me $7 or $8 and take the other $2 and go out and buy physical that you can access and put someplace that nobody else knows, or maybe one other person knows. And just so that and again, you don't do this with all your money either. Do it with a portion. Do it with 10%. But with all that you've seen in the last 5 years, to think that something like this can't happen, I think is being willfully naive at this point.
And how do you? What about alternatives? Doing a basket of precious metals, gold,
Yeah.
platinum?
So that's what I have. So right now, the allocation right now at this point, now it's always going to be at least 50% gold. But right now it's about 62% gold, it's about 3% platinum, about 12% silver, about 5 to 10% cash, and the rest is in maybe 15%, 10-15% is in precious metals mining equities, which have been absolutely destroyed, by the way. But I think there will come times when, I think at the end of the day, platinum, if we don't go off the cliff, platinum is going to do amazingly well because the supply is so constrained. It's basically mined in Russia and South Africa, and those two countries have huge problems with their mining industries right now. So even if we go into a recession and demand for platinum goes down, the supply is going down faster than the demand. That can mean prices could go up. And if we don't go off the cliff and China continues to grow at the rate they do, and their auto industry growth continues to be what it is, that's the biggest demand for platinum is catalytic converters.
They actually put one in China?
Do they what?
Do they actually put
Well,
catalytic converters?
I don't know if they do now, but I think in the future they will because the pollution problem is so bad.
It's horrible.
Yeah.
But that may be why they have partly why they have such bad.
Yeah. Well, I don't think they do now. I think in general they probably don't, but I think the demand for it is growing because of all the problems that they're having.
That's a good point. So that'd be good for palladium.
Yeah.
Yeah.
Can you spend a few minutes and talk about the crash in gold in the last week or whatever?
Yeah.
There's-
The most popular reason is that the gold cartel crashed it. The big bullion banks crashed it. And there may be some truth in that. But there's a way that can happen without them doing that. And I really don't care which side it's on. But again, there's a couple different ways to look at investing. There's fundamental investing, which is where Warren Buffett comes in. He does the analysis on something. He figures out it's worth 10x, it's trading at 0.4x, so he goes and buys it and sits on it for 15 years and lets that value accrete. Then there's technical investing that uses charts and graphs and levels of support, moving averages, and certain days above and certain days below. And that's a little bit more short-term oriented, trading in and out of positions. Now, from a technical perspective, there was a lot of support at the 1550 to 1500 level. But what that means is if it does go through that, that is a signal to people who trade technically to get out, because the next level of support might not be to 1400 or 1350 or 13 or whatever it is. And for the last since 2011 when it went to 1900, from 2011 until now, it had gone up and had come back and had tested that 1525 level about 3 or 4 times. And year to date, there was 3 or 4 events that should have been extremely bullish for gold. Germany repatriating their gold. That should have been extremely bullish for gold, and it wasn't. The Cyprus situation. They literally stole people's money out of their bank accounts. That should have been very bullish for gold, and it wasn't. There was another event. What was it? Japan coming out and printing like that should have been enormously bullish for gold, and it didn't really. It went up a little bit, but not much. So you saw all these events that should have been very bullish for gold that weren't, and it kept trickling down closer and closer to this technical support level. And then Goldman came out the day before and said, "Sell gold, it's going to 1350." And that on Friday morning, then I was sitting there watching because I was luckily, whether just by dumb luck or skill, we hedged a portion of the portfolio a couple of weeks ago. We had about a 10% short position, and we had puts that protected a portion of the portfolio at 1500 because of this support level that we saw. I was literally trying to put on another hedge that morning, and it dropped so fast I couldn't do it. It went from 1535 to 1475 in about 10 minutes. And I thought it might go to 1425, 1450. I did not think it would go to 1325. So that happened on Monday. So anyway, when that level support broke, I think there's a lot of people who had been expecting the gold to go up on these bullish events that didn't, and they probably said, you know what, I'm locking in a profit now. We've made money over the last 3 or 4 years. Let's just recognize it and get out. Because I think there's a lot of people, even the people that own gold, I don't think really understand it. I think they say, okay, it's going to have an inflation hedge, and that's the only reason to own it. Well, I think inflation hedge is just one piece of why you should own gold, but I'm not the whole world. So anyway, I think that was part of it. But the way it can happen without there being manipulation is if you understand how futures contracts trade. And you start to get into a little bit of the physical market versus the paper market here. And I'm actually a big believer in this. I don't think that the futures market is indicative of what's going on in the real commodity market, which is the physical market. For every ounce of gold that exists, 100 ounces gets traded on the COMEX. So it's an extremely highly leveraged system. So when you go out and you buy a futures contract on the COMEX, which is a combination of the Chicago Mercantile Exchange and the New York Mercantile Exchange, the LBMA, the London Bullion Market Association, that is where the big physical players play. The New York and Chicago, it's all electronic, it's all futures. So when you buy a futures contract, it's a little bit different for gold and silver, but just as an example, if you buy $100,000 worth of gold in a futures contract, you only have to put up $10,000. That's the way it works. You put up, most of them are margined up.
So it's a 10x lever?
It's a 10x lever, yeah. And they move it. Sometimes it's 15x, sometimes it's 8x, sometimes it's 20x. But the CME group regulates the exchange. They set the margin rate. But let's just use 10 to keep it simple. So if you put up $10,000 on a $100,000 investment, and gold goes down 2%, you have not only lost your $10,000, but you've lost an additional $10,000 on top of that. So when you're trading futures, the guys that trade futures, they buy and sell very quickly, or else they get carried out on body bags. I mean, literally, people get wiped out in a day because this can happen. So the interesting thing that most people don't realize is they'll say 400 tons of gold was sold on the COMEX at 8 a.m. on Friday. And it's true, but What they forget is 400 tons of gold was bought at 8 a.m. on Friday as well. So, you know, there's probably a lot of people who saw the 1525 break, they started to sell. Well, every time they sell, somebody else is buying. But those people that came in and bought, they're putting up $10,000. And then it goes from 1,500 to 1,495 in about 20 seconds. And those people that just bought, they've got to sell now because they've already gotten completely wiped out. And so now the people that bought at 1,495, they're thinking, wow, I got a bargain. And then 10 minutes later, it's at 1,465. And now they're completely wiped out. And so you get this cascading effect to where it eventually has to, it became panic selling. On Monday, on Friday it went from like 1535 to 1450 or 60, I don't remember exactly where it closed. And then Sunday the Asian markets opened and it held steady for a few minutes, and then at the same time that this was going on, Japan, because of all the monetary printing, their Japanese treasury market has been more volatile in the last 2 or 3 weeks than it's ever been before, because people are trying to figure out what the hell does printing 150 trillion yen a month mean, or whatever the number is. And so there's been big moves in the Japanese treasury market. And when those big moves happen, that affects big trading desks and how much leverage they can use. So there may have been somebody who liked their gold position, but then their Japanese JGB position moves too much, and now they've got a margin call because of that, so now they've got to sell whatever they can, so then they sell gold. Combine that with the fact that China came out on Sunday night with bad economic numbers, or worse than expected economic numbers, and everybody just started to panic. So Monday was just a disaster. Gold went from 1460 to 1325 at one point. Now it's back up to 1425.